Welcome friends, in this video we will look at the breakdown of Xcn coin. Don't forget to subscribe and like, and please watch to the end to understand. Looking carefully at the chart, we can see that for some time now, there has been a significant falling trend line that has been pulling the price down and creating selling pressure in the market. This trend line has caused the price to face strong selling on every bullish attempt. When we look at the past movements, we can see that the price has touched this trend line many times, and each time it has experienced sharp declines from here. However, things seem to be changing this time. The price approached this trend line again, as it did in previous attempts, but this time it was met with a strong buyer's reaction, and finally managed to break this trend. This breakout is a critical development in terms of technical analysis, because a break of this trend line, which has been pulling the price down for a long time, indicates that the bearish momentum in the market is waning and the trend is starting to change. Such a breakout is usually considered a strong signal that the uptrend will continue. Especially if this breakout is supported by high volume, it can further strengthen the bullish movement. However, there is an important point to note here. Although the price has moved above the trend, it has not yet retested. Usually, after such big breakouts, the price is expected to retrace back to the falling trend line and test it as a support. The retest is a critical stage to test the robustness of the breakout. If the price finds strong support at this point and starts rising again, we may see a trend reversal confirmed. In technical analysis, the retest of an important broken trend line is an important structure for a healthy continuation of the uptrend. At the moment, the signals from the market seem to be positive. If the price tests the support level after the breakout and encounters strong buyer interest there, the uptrend is likely to continue. If the price dips below the falling trend line again after this breakout, then there is a possibility that the move may be a bull trap, and the price may come under selling pressure again. But I don't think that will happen. I think it will retest and move on. According to the Elliott wave theory, when we analyze the current price action, we can see that the price has completed the first and second wave and is now in the third wave movement. In technical analysis, the third wave is often considered one of the strongest and largest movements. This is because this wave is a zone where traders' confidence in the market increases and buying pressure intensifies. First, the first wave was an important step that signaled the end of the downtrend and the start of a new bullish wave. The second wave that followed was a correction. This wave can be considered as a period of profit selling in the market, and some investors reviewing their positions. However, the important point here is that, despite the decline of the second wave, the price held on to strong support levels. This is a critical factor that sets the stage for the start of the third wave. The fact that we are now in the third wave shows that the price has entered a stronger upward trend. In technical analysis, the third wave is usually one of the biggest and most aggressive moves, as more investors in the market want to participate in the uptrend, and this pushes the price higher. The yellow line and the green line, which have been identified as target levels, stand out as areas that this uptrend could potentially reach. Due to the nature of the third wave, it may be possible to see a fast and strong bullish movement up to these levels. Also, the targets of the third wave are usually in line with the Fibonacci ratios. If the price follows the classic Elliott wave rules, the third wave is expected to extend to at least 1/618 times the first wave. This suggests that the price action has the potential to gain strong momentum and reach the designated yellow and green lines. Looking at the chart from a broader perspective, it is clear that the price action is forming a specific pattern. This pattern is the W pattern, which is often encountered in technical analysis and is considered a strong reversal signal. W patterns usually appear after downtrends and are considered an important indicator that the price will enter a new uptrend. Looking at the price action in the current situation, we can see that the price has moved up to the neck of this pattern and is currently trying to break this critical level. This zone is one of the most important points that determine whether the pattern will continue or not. The neckline is a very strong resistance point in W patterns, and an upside breakout of this level usually results in a sharp, bullish move. When this breakout occurs, there may be a significant shift in market psychology, and traders' confidence may increase, leading to more buying. As a result, the price may accelerate its upward movement in line with the technical target of the pattern and move up to the starting point of the pattern. Since such patterns usually provide a strong acceleration in the price after their completion, it's possible to say that the upward expectation dominates in the current situation. However, one of the most important points to note here is how the breakout occurs. If the neck breaks with strong volume support, this upward movement is expected to be healthier and more sustainable. Because volumeless breakouts can often be misleading, the price is likely to pull back and test support levels again. However, if a high-volume breakout occurs, it is possible to say that the upward movement of the price will be stronger. Bullish breakouts usually boost investors' confidence, leading to more buy trades in the market. This may help the price to realize the technical target of the pattern more quickly. In the current situation, the price is struggling hard at the neck and may make multiple attempts to cross it. Usually the price may linger at such resistance levels for a while, but the upside breakout may occur once enough momentum is established. Especially when we examine the previous price action, we can see that the price has faced selling pressure and pulled back when it approached this level before. However, each time it is tested, this resistance may weaken, and eventually the pattern may be completed with a strong breakout. Another thing to watch out for at this point is whether the price will make a retest after breaking the neck. Usually on such breakouts, the price may retest the resistance level it broke and continue its bullish move after confirming it as support. If such a retest occurs, we can say that this level is now working as a strong support and the price is more likely to continue its uptrend. However, the price may also make a direct upward move after the breakout, in which case we may see sharp rises. In terms of technical analysis, the W pattern is generally considered as a harbinger of upward movements. The technical target of this pattern is the distance to the level where the pattern starts, and if the neck is successfully broken, it is quite possible that the price will reach this level. Currently, the price is at a critical resistance level and is trying to break through it. If a strong breakout occurs, the upward movement can be expected to gain momentum and accelerate. It is necessary to follow the breakdown. Looking at the RSI indicator, we can see that the long-running downtrend has finally been broken, and a clear uptrend in the RSI has begun. The RSI is an important indicator that measures the momentum of price movements, and breaking downtrends in particular is often considered a strong signal that the market is changing direction. At this point, the fact that the RSI has broken the downtrend suggests that buyers are gaining strength and selling pressure is starting to weaken. If this bullish trend continues on the RSI side, this will reflect positively on price movements and contribute to the price maintaining its upward momentum. From a technical analysis perspective, the RSI breaking the downtrend is usually a strong leading signal that the price will follow suit. This is because a rising RSI indicator indicates that buying pressure is increasing in the market and that the uptrend can proceed in a healthier way. In particular, if the RSI rises above the 50 level and stays there, the buying pressure may increase further and the uptrend may strengthen. If the RSI maintains its current momentum and continues to reach higher levels, it is quite likely that we will see a strong upward movement on the price side. The RSI breaking the downtrend can be considered a positive development as it shows that the market is slowly gaining strength and sellers are starting to weaken. Usually such breakouts on the RSI side follow the price action and cause the price to rise in a similar manner. If the RSI continues to rise, it is quite possible that the price will move higher and enter a strong uptrend. Especially if buying pressure increases, this uptrend could accelerate and the price could test new resistance levels. Yes, friends, let this video be like this. Don't forget to subscribe and like. See you in the next videos.